Hello, everyone. Welcome to Happy Hour. I'm Rebecca Gomez.
And I'm Cody Willard, and this is where 50% of us is still running at 100%.
Me?
No, you're running at like 20% over there.
God,
How are we doing?
I came down with this bad cold overnight, so I'm just like feverish, aches and body aches, chills and everything. So if I say anything cuckoo, it's because I've got medicine head. That's my excuse today.
But you're plowing through it. You're here with your sleeves rolled up, ready to rock and roll, aren't you?
Absolutely.
The market's never closed for the flu, does it?
I know. See, we're always open for business.
That is right. Happy Hour. Fox Business always working.
All right, so you got some market news for us?
I think we're going through the markets.
Cody's going to try handling the markets this time.
A down open and more intraday back and forth until a strong close left the markets up a decent bit across the board today. A decent earnings report from Verizon and Corning kept the tech bulls from freaking out, and the financials led the charge as they continued their rally to the upside. All the colluded effort among the world's governments, central banks, and investment banks apparently has convinced traders that the banks have probably finally bottomed. 50% declines, as basically every bank on the planet has suffered in the last 3 to 4 months, that'll price in a lot of future ugliness. And as I noted on Friday, we might finally have the banks in a position where they've written down too much. Who knows, guys? They've been writing down anything they can find in their books that they should write down. At some point, they'll shoot too far to the write-off side, just like they shot too far to the, pretend it didn't happen side earlier. Yeah. So anyway, my question to you guys is, if everyone is looking for a weak first half and a strong second half of 2008, as it seems every trader and pundit that I hear and talk to seems to, shouldn't you be set up for exactly the opposite? Perhaps bullish for the first half and look for some weakness in the second half.
Is that your theory?
I think I'm getting there, yeah. I'm starting to get much more bullish about the near term, and then I'll start getting worried about what these dues that are still coming down the pipe that we got to pay. But I think in the near term, I'm putting my bullish hat back on. We're going to talk to my mom later on in the show. I had her take a bunch of money out of the market late last year. We're going to put some back in today.
All right, well, let's tackle some earnings. American Express reporting after the bell for a Fox Business Alert for you. We love that animation.
Love those Fox Business alerts.
Basically, fourth quarter profit falling 10%, and this is because Amex, as we've told you on this show before, is seeing weakness in their consumer credit cards. And this is surprising to a lot of people because you think Amex, with its wealthier clientele, would be immune from the economic downturn, but basically they had to set aside more money because they expect more bad loans in the future. So Amex coming out with some disappointing economic news as well.
And certainly no surprise to anybody watching us. I mean, we've been saying that, guys, Amex is going to face a lot of these same problems. At the high end, is not protected from the credit crunch. It's happening. You know what? The fact is, again, Amex is down 40, 50% from its highs. At some point, this stuff does get priced in. The XLF, the bank index, was up 2-3% today. There's definitely the panic selling in the financials has subsided. I don't know whether we got enough upside in the fundamentals.
In particular, they noted the bad credit in California and Florida, big areas where people took some investments on the subprime and got burned. Okay, another after earnings report, SanDisk. This is the world's largest maker of data storage memory chips. You like to follow this company.
I do. It's a good company. As far as secular growth, I talk a lot about the difference between cyclical and secular growth. The fact is that the type of memory that SanDisk makes is the thing that goes into, say, your BlackBerry right there. It goes into the MP3 players, the smaller iPod, shuffles and whatnot. The computers of the world still use hard drives. That's basically 100% market share in the computer world with hard drives. But the fact is that SanDisk technology is going to be replacing that over time. This is a secularly growing company. The quarter itself is pretty good. I don't think it's going to get Wall Street too riled up one way or another. Fact is, it's still showing that secular growth that I'd want to see.
Yeah, it did post a quarterly profit versus a year ago when it took a loss because it acquired a different company. Although they are going to face some competition they do already from Oracle and Microsoft, later on this year when they come out with, what is it, the Hyper-V or something of that sort?
You're thinking of VMware. VMware. Okay. Fast forward to VMware.
They're out with their earnings as well.
VMware out after hours. I'll just note that SanDisk, their biggest competitors are the Hitachis of the world, the Korean companies.
Hitachi.
Yeah, exactly. It's a very low margin business the SanDisk has. They came in with 37% gross margins rather than 34% gross margins, something I like to watch. When you see the gross margins moving up, that means they're executing well. Again, I like the stock here. Of course, I liked it around $33 when we first started the show. It's now at 26.
So maybe you like it even more.
Yeah, I do, actually.
Better of a bargain. Okay, so VMware also coming out with their earnings, and this is the company that is doing pretty well, but they may face some competition from Microsoft and Oracle.
Absolutely, and it's certainly, I mean, the Wall Streeters of the world, the analysts of the world are panicked about Microsoft somehow coming in and undermining VMware's business, much like when I owned Apple at 7, 20, 30, 50, 80. Everyone kept telling me, ooh, the Zune. Oh, wait, the real network
Microsoft
players.
Zune, yeah.
Someone's going to take down Apple. Look, VMware dominates the virtualization sector of the world. They will continue to do so.
Right.
Stick with VMware. It's probably my favorite stock for this year.
Okay, well, let's bring in Brian Reynolds, Chief Market Strategist for MS Howell & Company.
Hey, Brian, great to have you on the show.
Hi, Brian. Welcome to Happy Hour.
Thank you. Your 20% is probably better than most people's 100%.
Nice. Well
Thank
done.
you very
My
much.
100%, I'll tell you.
I know, I tell you, this cold is going around. I mean, you know, granted, in the winter, everybody gets a cold, but this is a bad one that's going around. But let's talk about also the rogue trader. Now you see it from Societe. Wait a minute. We're going to try. Societe Generale, the French bank that had the trader last week, the big news, $7 billion in losses. Well, he was freed today, though he's still going to face charges. You know what's interesting on this one, though, is that now all the newspaper articles are saying alleged rogue trader, because they're not sure if the bank knew about what he was doing and just let him continue because he was making some profits.
I can't speculate on whether it was just him or whether it was part of a bigger thing, but we know there was a lot of trouble in that bank, and that produced a lot of forced selling in the markets. The thing is, that prompted the Fed to ease by 75 basis points. And now the Fed, if it was just a rogue trader or a group of rogue traders, the Fed may say, oh, maybe we did too much. The problem is the credit markets have been a disaster this year, and they should probably have eased by more than 75 because of that, but the Fed's been so slow. I've been calling for them to do even more since October because we're in the middle of a credit disaster. So it may be the Fed did the right thing, but for the wrong reason, and that gets me worried for Wednesday.
Well, so, Brian, I mean, you're talking that we are in a disaster, and I keep coming back to, guys, if we have a downturn, it's okay. A recession isn't necessarily a bad thing, but are you basically saying that if we do have a downturn and the Fed's not aggressive enough, these fiscal stimulus packages aren't aggressive enough, are you concerned that we would really have some major disaster?
It's been a disaster already in credit. I can't think of a worse start to the year. Junk bond yields are up more than a full % this year. And this year's only 3 weeks old.
Junk bond yields means that the cost of capital is skyrocketing.
Not only is the cost of capital skyrocketing, its availability is plummeting. Berkshire Hathaway, Warren Buffett's company, they had a hard time, not a hard time, but they had to pay a lot more. They had to pay a full % more for money than they were a year ago. If people don't want to give money to Warren Buffett,
then we're really in trouble.
Why would they give money to these junkie companies?
Let's hear from the prosecutor so we get the latest on this story as well.
Sont certes les autorisations qui lui étaient données d'agir sur le marché, mais il n'a pas agi pour, j'allais dire, spolier la banque par des opérations frauduleuses. Ce qu'il espérait, c'était apparaître comme un trader d'exception, un anticipateur de marché.
I wasn't able to hear that. Were you able to hear that?
I was not able to hear it, but it's probably in French anyway.
Okay, well, we translated it. I guess it just didn't work out. But basically, the prosecutor there is saying that he didn't act for his personal gain, that this guy wanted to be seen as a star trader, and is why he did all this. All these illegal trades.
Risk tens of billions of firm capital.
I mean, talk about ego.
Glory.
There's been a history of rogue traders throughout the decades, and each one, it's a separate individual case, but you look at their motivations, and some of them, you wonder why they do this. They're taking all kinds of risk, their trades go bad, and all of a sudden they throw good money after bad until somebody finds out. So whether it's just him, or whether it's part of a group, the big issue is that we know people got into trouble at that bank, and that had a big impact on the system. And then it was able to happen,
just that it was able to happen, a huge bank like that. You think that they'd have enough controls in place
Brian,
to prevent this?
Are you concerned that this is just one of many that we're going to start finding out about now that everybody does have to come, that all these off-balance sheet things that they've been hiding things with are no longer cool, so they got to bring it all on sheet?
We're sitting on the edge of history here. It's either going to be a 98, 99 history where things are so bad and all of a sudden they get better and we go rocketing higher like we did throughout 1999, or we're on the verge of a 2001, 2002 scenario where we melt down. And right now, it's up to the Fed to get ahead of expectations like they did in '98. If they get ahead of expectations, we're going to the moon.
You really think the Fed can control it, can help it, can make it these
We're
things,
in the middle
can
of
resolve this issue?
In this instance, yes, because we're in the middle of a panicked flight to safety. People are pulling their money out of all types of risky instruments and putting them into safe things like Treasury money market funds. They're giving up 2% for absolute safety. That's the classic illustration of a full-fledged panic, which is what we're in the credit markets.
Feet to fire. This time next year, the market will be 20% higher or 20% lower then, Brian?
It all depends on the Fed on Wednesday. We've got a full 50 priced in for Wednesday. If they don't deliver, we're in trouble.
50 basis point cut.
So you're looking for 50 or the market tanks on starting Wednesday?
That's what all the financing markets are priced for. If we don't get it,
to see you.
trouble.
Brian's an old friend of mine. It's an honor to finally have you on the show,
Great to be here.